All right, so we had another very big week in the markets. Everything was up, namely because of NVDA and this AI hype that's going around. There's a lot of these big tech companies that are up a lot. Getting into the markets here straight up, the S&P was up nicely on the week, 1.3%. It is very close to its year-to-date high. The year-to-date high, I believe, was 42.12, right? And we're at 42.05, so very close to that. Again, the market is traded in quite a clear range, right? It hasn't really gone below. Actually, it has. The last time it's gone below 4,000 was in March, so a couple months ago. But again, it's been in this range of the high 3,000s and up to 42.12 on the S&P. I think that that's going to keep happening until one of two things happens. If we get a recession that's worse than expected, it will go down, and it will go down further. If the Fed pivots before that happens, which they probably won't, but let's just say they do, then we go up. Eventually we go up. Whenever the Fed pivots, that's probably when we go up. And now again, nobody really knows who that is, right? No one can predict the market. There's a lot of indicators saying that's going to happen as soon as this summer, maybe the fall. Other people are saying late this year, early next year. Nobody knows, right? Nobody knows. But the one thing I do know is eventually it will go back up, right? That's the one thing we do know. So as far as other things go, oil has came up a little bit on the week. That's nice to see. On the month, we are still down a little bit. Year to date, we are basically flat, right? Basically flat, I guess down slightly. But again, oil has gotten as high as, 83 roughly, as low as about 66. Again, it's probably going to stay in that range, right? Because if demand picks up, then production will pick up. If demand goes down due to the recession, then they will probably just cut production more, right? Oil probably will not go significantly lower. Again, nobody knows though for sure. Bitcoin, a lot of people are trashing Bitcoin right now because it's down quite a bit on the month. But again, what they're not telling you is that it's still way up year to date. Year to date, it's still up like 60%, right? So Bitcoin, again, the long-term bull market is still in place, right? Obviously, my opinion, do your own due diligence. But again, we are, like I've said a lot before, I think we're going to see a Bitcoin halving cycle coinciding with a Fed cutting cycle, which is going to be very bullish for Bitcoin. That's when it's going to go into the hundreds of thousands, right? Upwards of maybe 200-300, right? Again, just my predictions. I would say probably, I don't know, 200,000 to 300,000 probably is where my best guess of where it will end up over the next 3 to 4 years, right? Just my opinion. The NASDAQ also has done very, very good, namely because of NVIDIA and some of these other big tech companies. It's up a lot on the month. I think it's up like 7-8% against 12,000 to just under 13. Again, how high has the NASDAQ's at an all-time high, very clear all-time high right now. Not all-time high, year-to-date high. Again, we're going to see where that goes. Again, the NASDAQ probably is going to trade slightly more levered than the overall market, right? Because that's just how the NASDAQ is, right? So again, getting into earnings here, we did have one really big company release earnings, being NVIDIA. And again, I've talked about NVIDIA a lot before, and I don't think it takes a genius to figure out that NVIDIA is very, very, very expensive right now. They have a price of free cash flow of 252. Right? I wouldn't pay anything more than 40, probably around 40 for any company. I don't care what they are, right? That's just my opinion. Again, they're not super profitable, right? This is a textbook growth stock, right? And again, the problem with growth stocks is they're not as good as what people think, because growth stocks did very well in the the 2010s and the early 2020s, right? Problem being, these kind of things typically over the long run are kind of cyclical, right? And again, like I said, let's just look at NVIDIA here just to show it here. their average 5-year average price of free cash flow is 65, which is still expensive. That's still more than I would pay, right? Their 52-week low is 108. That's probably roughly what I would be comfortable paying for it. Price of sales of 36, right? The traditional rule of thumb is anything over 10 is crazy expensive, right? So again, by every metric, this company is extremely expensive. So that begs the question, why is it so expensive, right? And the reason being is there's a handful of things. The first one being they released earnings that they did very well. They did, sales and profits were both down, but everything else was up. Revenue was way up. If you look at data center, their data center segment was up. Their earnings per share was up. Their gaming was up. And I think the other big reason here is the AI hype. That's another thing that I think investors need to be very skeptical about, is this AI hype. It is not this panacea where everybody's going to invest in this stuff and just blindly get rich, right? We could see another, mini tech bubble kind of thing here when it comes to AI, right? Again, AI is going to change the world. But again, how many of, if you go back to the tech bubble, how many of these .com, they're going to change the world type companies actually change the world? Like very few of them, right? Very few of them. So again, I think NVIDIA is a very good company, right? I'm not saying they're not. I think they're just very, very overvalued, right? The next one here is Lowe's. Again, not a company I own, but I think it's a good proxy to see how the economy is doing, at least in a way. They're a solid company, right? I mean, I like their dividend growth too. That's very phenomenal. But again, if you look at them, there's some reasons why I'm not necessarily a fan. Their growth has a lot of issues. Profitability, they're okay. Returns, they're okay. I would like to get them cheaper, though. I mean, they have beat the S&P very easily, right? But I would like to get them cheaper, right? If we look at they are below their historical price to free cash flow, but these are the kind of companies you really want to buy in recessions because they're going to do very well when we come out of a recession, right? If we look at its 52-week range, it's near the high, right? Again, it's at 206. The 52-week low is 170. If I could get it 170, 180, I'd probably look at picking it up. But again, that's just my opinion. They did beat earnings and revenue, although the CEO does expect a pullback, right, because of the expected recession, right? The next one is Agilent Technologies. This is a company that I'm interested in. I don't have a position in, though. They're in the life sciences area, which is an area I'm very interested in. They are near their 52-week low, which is a good thing. I mean, if you're looking at picking it up. But revenue up, income was down, right? So earnings were kind of mixed, right? They were kind of mixed. I would like to start picking up a position in this company, although I'm not quite ready to dip my feet in, if I'm being honest, because they're still expensive, right? Price of free cash flow of 33, that is below their 5-year average, but I'd like to get it below 30. If I could get it below 30, I'd be happy, right? Just my opinion. The next one is WSM. This is Williams Sonoma, or Sonoma, I don't know, whatever you pronounce that. Again, they beat earnings. They're kind of a dividend growth company. That's the main reason you're buying it. Again, haven't taken a position because I don't think it's a true best of the best company, but I do watch it. Costco, this is another one that I really like to watch. I don't own it because if we get into it here, again, very good company, right? An incredibly good company, crazy consistent growth. You're not going to destroy the market by any means, but it's crazy consistent. The main reason that I don't own it is it's very expensive, right? Price of free cash flow of 39. I'd want to get it at like 25 probably to buy it, right? So this is a company that I don't think I'll ever get into, that I would like to get into, but I don't think I ever will. 443 is the 52-week low. Even then, I still think that's probably expensive, so I don't see myself getting into this company anytime soon. Royal Bank of Canada, profit down, revenue up, earnings per share down. Again, they're getting hit because of the issues in the banking sector, the slower economy, that kind of stuff. Again, it is a very solid company, though. Very, very solid, consistent dividend growth. That's the main reason why you're buying these kind of companies, right? They're growing at 7.7% a year, 4.29% yield. That's the main reason you're buying these companies. Again, it is closer to the low of its 52-week range. If it went down there, I'd probably consider buying some, but until then, I wouldn't be interested in. Again, TD, the exact same story. Earnings per share down, profit down, revenue up, right? Exact same story here. Dividend growth, that's why you're buying it. This one's actually almost 5% right now, which is pretty interesting, right? Pretty interesting. Let's look at the 52-week low. I'm guessing it's close to that. Yeah, very close. It's at 57 and change. The 52-week low is 55 and change. That's when I would consider picking it up. And that's everything, right? That is everything for the week. Those are all the companies I wanted to talk about. Again, like I said, the main thing is NVIDIA, right? And again, people are going to get burnt on this. Now, again, I'm not saying it can't go higher, but again, there are two iron laws when it comes to investing, in my opinion, right? The number one is buy good companies. Now, again, it is obviously subjective, at least to some degree, what a good company is, but the other one is buy them at a good price, or preferably when they're at a discount. And the problem with NVIDIA is that it clearly is not, right? Again, if you look at the best investors, they buy good companies when they're cheap, or any form, real estate, whatever, you name it. That's what they do. They buy good quality assets when they're cheap, right? And again, it is pretty easy to tell objectively if something is cheap or not, right? That's something that it is a lot less subjective than what a good company is, right? At least in my opinion. I don't think most people would argue with that. So that is what I wanted to bring up today. If you liked the video, hit that like and subscribe, and stay tuned for more.